I did. So I think the market's okay with it today and this week. But my view is still that it's a treacherous market. As you pointed out, and I think the critical point that you made is that QT really hasn't gotten going yet. And it does take a while for rate increases as well as easing to filter through the system. So, no, this is what we're going to see over the next few months. We'll see bounces along the way. We may even see sustained rallies of a couple of weeks. Wouldn't surprise me. But I will tell you that any stock that I sold, despite this week's action, is still lower than where I sold it. So I'm not worried about missing a major move in the upside, although I do expect, given how entrenched I am in being a bear, that I would miss the turn in the market at some point. But I don't see that turn coming for a number of months. But I did buy Qs. I bought Qs because the market was looking stronger this morning. I thought it had some continued momentum. So I got in, didn't get in anywhere near the bottom today, but I did get in before the top. And I'll hold most of them till the end of the day. I'll probably sell about 3/4 of them and keep the rest into tomorrow. I don't really think the employment number tomorrow is going to have much of an impact on the market at all. I think that it's right now moving okay. What will have the impact are something else. Another point you made, good point. You're well rested, making all these good points in one shot, is that we now see the 10-year above 3%. And I did, as my final trade yesterday, short it. So I'm happy there, and I think it continues to rise.
I know. I mean, you don't throw around compliments lightly, so I'm really flattered and honored that you would notice my well-restedness and the good points that I made today as well. The show was young.
I stuttered.
I know. I hear you, Jenny. So talk to me. The minutes were hawkish yesterday, right? No way around that. Market held its own.
Right.
Is that a sign of anything significant that we need to take from here, or do we need to keep the other things in perspective too? Could already be in a recession, and the Fed has just really embarking on QT. Right. And there are major implications to go along with the rate hikes that they still suggest are coming.
Right. So when you asked Steve if the market was content with the Fed, I don't think we're content. I'm 47 years old. I can't eat a pint of ice cream every day without a problem like I used to. I'm not content with that, but I'm at peace with that. And I think that's where we are with the Fed. We're at peace with it. And I think we're kind of at peace with where we are in the market. I don't know if we're in a recession right now or not. I'm not sure it's worth worrying about if we're in a recession, because why do we worry about recession? We worry about recession because we fear the bear market. We fear losing money. Where we are right now is we are in a bear market, right? We've been down 20%, 24%. That's where we are. So I think people are becoming at peace with this idea. People are becoming at peace with the fact that we're now trading at 15.9 times earnings. That's a reasonable valuation. I also think Steve made an interesting point when he said, that he didn't want to miss the big rebound. We've become conditioned to V-shaped recoveries where the market bottoms and rebounds. I don't think that's happening this time. I think we're going to bounce along a bottom. Maybe we rebuild, but this isn't going to be like past bear markets. It's not going to be like past recoveries. And so I think this is all just what we're digesting and getting used to, which is something that doesn't, I think, elicit as much excitement or enthusiasm as past recoveries have. We're just kind of getting content. Sorry, not content. We're getting at peace with where we are. It's not a wonderful world. We're not going to be up 30%.